Hey team, Claire here from My Mortgage. Just wanted to do an update for you for the start of November 2023. So lots of queries about rates and the market at the moment. So I'll start with the market. What we're seeing across most of the centres in the Waikato is a little bit of an uptick. So definitely an uptick in demand, more open homes, a little bit busier, definitely more properties with multi-offers and a little bit more interest out there, which is really cool, particularly in that lower end of the market. So the real estate agents will be happy. What we're having some really good success with is getting people pre-approved nice and early, and then getting the bank to approve the property so that they're in a position to make a really strong offer. So talk to us if you've got some buyers that you're wanting to get into a really good position and who are really competitive with their offers and kind of motivated to get that done. With sell and buys, we're definitely seeing a lot more inquiry here, as obviously it's a little bit easier to sell than maybe it was 18 months ago, 6 months ago even. So definitely a lot more inquiry there. So we're getting those people pre-approved and really trying to move that process forward for them so they can get into a new home before Christmas and hopefully make that nice and easy for them as well. Thirdly, rates. What's happening with those? Well, I think even though the data is still pretty divided, it's looking like the Reserve Bank will probably hold the OCR for the next kind of couple of months. So the November one is widely expected to be held, and then it's probably likely that'll happen in February as well, just regarding the economic factors we're seeing coming through with inflation starting to drop back a little bit. Probably the war in the Middle East is definitely have a few potential implications on what we might see out there, but assuming that doesn't sort of affect things too much from a commodity perspective, we're probably still seeing rates start to come back kind of end of next year. And I think that's probably the mid-range of when it might happen. It may be a bit earlier, it might be a bit later. So when you're considering a fixed rate, think about the level of risk. So really important to assess that. How tight is the existing budget? How much could you afford for rates to go up if they did increase a little bit more? Unlikely, but where does that kind of appetite for risk kind of sit? And then what might the long term look like as well? So sort of recommending no more than about 2 years at the moment, given that rates are probably going to have come back in that time. So just wanting to make sure that we're giving everybody the opportunity to have a full review. Lots and lots of good options out there with the banks, a big discrepancy on rates, a big band of where rates are sitting at most of the major banks. So definitely talk to us about getting a good rate, and also potentially getting a couple of options to switch banks or to even just restructure your lending and optimise it a little bit. So if you've got any clients in this space, get them to reach out to us. We've got a bit of capacity at the moment, even though we are pretty busy heading into the end of the year. So really would love to chat with them and also touch base with you before the end of the year. So look forward to doing that, and until next time, talk soon.